Hey, terrific Thursday morning to all. It's Paul Walton from Cherry Creek Mortgage Company, Mortgage Market Insight on August 16th. And yes, we have had another interesting day. Do take note of back where the market was at 104.20 and where we're currently at right now, which is at 102. So that's about 200 basis points wiped out in a short order here. So in basically less than a month. So at any rate, the first signs of that were back here on July 27, 28, 29th with the opening, drop to close, opening, drop to close, and then we've kind of come back down. But what's really behind that is this massive stair climb up until we hit July 25th and then to where we're actually at today. So 102 should actually provide some support for us, and as you're going to see, if we trace it back to where we were, you're going to see us probably bounce off of 102, trade between 102, 102.20 or 40, and it's going to take us a while before economic news pulls us back up. But we should see a correction probably back up to about 103, maybe at about 102.80, somewhere in there, but that's going to take some time probably. So let's take a quick look to how trading looks this morning. Our opening at 102.31, not good. Brief pop up, and then one reprice for the worse at 7, another reprice for the worse at 10, another reprice at 10.50, and then we're back up to 102, which is what we were looking for. So hopefully we can actually close above this today. If we drop too far below that, all bets are off. We could be heading down 101.60. That would not be pretty, but we should have fairly good support sitting in there, and we should again at some point bounce back up to this 103, being a 50% correction of where we actually came from. So at any rate, what is driving the markets this morning? We have the building permits, which has actually gone up since March 16th. Steady climb, not huge, but it's steadily gone up. That shows that the housing market is showing some signs of recovery. Unemployment claims have dropped and kind of stayed around 375 with the exception of July 19th where it came in at 386K. But it's slowly been decreasing since the 5th of July, and it's been underneath 380, and that was pretty much where it was from June 28th until from May 31st to June 28th. So claims are down. This is another thing that's kind of causing a little bit of a correction in the market at this point in time. Housing starts are up, and it's been a steady climb up since March 16th, 2011. Now, Philly Fed manufacturing has been way off. That's been below, it's been negative since May 17th, negative 5.8, negative 16.6, negative 7.9, and then negative, negative 7.1, negative 12.9, yeah, negative 16.6, and negative 5.8. And that's been from May 17th to now. And before that, it was at best at 8.5, 12.5. So we're seeing some issues there where manufacturing is not, at least with the Philly Fed, is not showing a lot of growth. So be careful, look for this correction to come back up. But again, if we hammer below 102, we could could be dropping to a whole new trading range. Look to stay positive, and this also with the housing market starting to recover is probably putting a dampener in the, it's not, the Fed isn't going to be looking at pulling out QE3 with seeing the housing market kind of recover, retail sales pumping through the roof, not really, but it was up 0.8, which is very positive. So, and inflation was somewhat in check. Core CPI was flat, but PPI was showing a little bit. So, at any rate, have a fabulous day, and I will be back to you on Friday morning.